This week's market report, we're going to key in on specific numbers again. I always look at total sales, new listings, active listings, and the average price. And we can see here total sales for the month of March, which we're only 11 days in. So we'll call it a third of the month. We're down almost 30% compared to March the year before, which was again, or no, that was actually an increase over March of 2023. So the market is going through a bit of a fluctuation. We came out of COVID and we started to fly up with inventory and sales. Now, with a little bit of uncertainty going on in the world markets right now, sales are starting to dip. Investors and homeowners are starting to step back a little bit, and they're going to review things before they jump into the market. The next thing is the new listings. This is actually good for real estate investors. The more listings that come on the market, the better price you're going to get, the more negotiating power you're going to have, and the less competition you're going to have for properties. And for instance, last night we went into an offer situation in a house in Parkland. And normally, if this was 6 months ago, we would have 6 or 8 people competing for that property. We were only up against one other buyer. So it was very beneficial to our buyer because he actually got the property. He didn't have to bid way over list. Yeah. And what we're seeing is this lessening of the competition for nice properties. And our clients, our investors are starting to be able to pick up great deals in great neighborhoods.
Yeah, and I want to stress this because we had a few calls today from some high net worth clients, and they're looking at pulling money out of their stocks or whatnot. And we want to stress that Calgary real estate is a safe investment, okay? And you see that sales are down. People are sitting on the sidelines, and they're simply sitting on the sidelines because there's some madness going on down south right now. This economic terrorism, that's what we like to call it, it's got some uncertainty, so you see what's going on. What we feel, and we want to stress this, and we always like to get our point of view out to our investors. We never want to hide it. Our point of view is that, yes, there will be jobs lost, and we feel there'll be jobs lost out east. And we feel, and we said this 2 weeks ago, that Calgary is going to go through a mini construction boom, and it's going to be fueled by people moving here, okay, from out east. And we're hearing of car plants closing down already out there. And we feel people are going to look for an alternative place to live. And Calgary, I mean, we've done full-on seminars on this, on all of the economic factors why Calgary is going to thrive. And the calls we got today was all about, Tim, with the amount of construction that's already going on, are we going to see a decline in prices? We're here to say no. And the main reason behind that is simply because 60% of the units being built today are purpose-built rental units. What that's going to do is, yes, soften the real estate market, especially in the condo segment. But in terms of prices, we're still going to see an increase, and a number of reasons, just because they're not building enough properties to be sold as owner-occupied properties. And so supply is going to remain low in that segment.
Yeah, and what you see at the bottom right-hand corner of the page there is the average price for March is up almost 7%. Now, you compare this to the larger centers like Toronto and Vancouver, they're basically flat. Their prices fell the last half of the last year and have just started to turn around right now, and they're seeing some small increases. Calgary never saw that. We had increases all the way. Our increases aren't huge. They're not 12, 13, 14% that they were last year, but 7%, 6.8% increase in the month of March, and probably year to date, we're right around 6.5%. Calgary's 75-year average is 3.5%.
Yeah.
So we're double of what our 75-year average is. You can't beat that. And we're going to continue to see that because, as Azad said, well, there's lots of new building going on. A lot of it's purpose-built rentals, but the newer builds that they're building for sale, the construction costs are so high right now. And where are they going to go if tariffs do come in? We don't know, but it's a lot cheap. You just can't build a new house the same size and specs as the ones on the resale market right now for the same price.
Yeah, Tim, a starter home without a garage starts at 750,000, and that is in the brand new community. So what that's going to do is anything inside those brand new communities, closer to the city center, and it could even be, Tim, where Jesse just bought in Somerset, that's going to force those prices upwards because they can't build the same product for the same price right now. So you know what, Calgary is a safe investment, and you know what? I'm happy for our clients, Tim, especially right now that are looking to get in, because when you see this little bit of uncertainty, properties coming on the market, sitting a little bit longer, that is the best time to get in. And the main reason, Tim, just quickly, is because you get a better property, right? You're not, when the market is hot, you got to settle for less. And when the market is just, you know, sitting where it is right now, you can pick up something, and you can see the quality that we're getting our clients. So that's awesome.
Okay, so that's our real estate market update. Normally at this time in that seminar, Danielle DeMarco, our mortgage expert, comes in and she gives the mortgage market update. She is currently with clients tonight, so she can't be here. But we're expecting a Bank of Canada interest rate update tomorrow. We're anticipating a 1/4 point decrease. Danielle will be on in our next seminar to discuss the effects of whether it's increased, decreased, or whether it stays the same. She'll have her insights on that. But that concludes our market update for this week.